Hey everybody, it's me, Bette Hochberger, CPA, CGMA, and on this video, we're going to be discussing the top tax strategies for real estate agents. So if you're a real estate agent, make sure you listen up. I would say the most important thing, and this is not just real estate agents, this really applies to everybody, but real estate agents, we're talking to you today. Deductible business expenses. Make sure you are keeping track of all of your business expenses because that's where the gold lies, right? If you forget to write things off that are business related, you're just paying extra in taxes. That's all you're doing. So look out for those office expenses, those professional fees, those marketing and advertising fees, all of the things that you pay for to get your job done. Deductible business expenses. Now, in this day and age, a lot of folks are working from home. Maybe you even qualify for a home office deduction. Now, this doesn't necessarily apply to every type of real estate agent, so you do want to consult a tax advisor like myself or someone to help explain it to you because there's a lot of rules that go in with that one. But if you do qualify, you absolutely should be taking advantage of the home office deduction. Now, maybe you don't work by yourself. Maybe there's other people that you split commissions with, like other agents perhaps. Make sure that you are not paying taxes on the full amount that you are getting paid if you're paying out part of it and you're splitting commissions with somebody, right? This is really important, especially if you get 1099s, because you could receive 1099s for a total amount, including amounts that you paid to other agents. So you're going to want to make sure that you split those commissions out properly, document everything properly, file whatever forms you need to file so that you're not paying taxes on other people's income. Health insurance. Woo, is health insurance so expensive these days? If you're a self-employed real estate professional, you can be getting big deductions for health insurance that you're paying. And it's not just for you, it can also be your spouse, your dependents. You have to make sure you qualify properly. So again, talk to a tax professional. Retirement contributions. This is one of my favorite tax tips for everybody. Retirement contributions are such a win-win for people because you're getting a current tax deduction. So you're literally right now lowering your tax bill, and in the future, you're putting aside money for yourself. So your future self will thank you. Your current self will thank you. There's really no way to go wrong with retirement contributions. And there's a lot of options for different kinds of accounts that you can set up for retirement contributions. So you're going to want to speak with a tax advisor and maybe even a financial advisor to make sure you set up the correct retirement account for your needs. Qualified Business Income Deduction, or otherwise known as QBI. Now, this one, we're not going to get into how you calculate this because it is complicated, right? But if you're qualifying and you can get this big deduction, it's really fantastic because it's basically you're in business and you're getting a deduction for being in business, right? There are limitations on this. There are income limitations and other requirements. Definitely talk to a tax professional like myself, or whomever. Do a little research. It's a complicated calculation. It's not an easy number to come up with. But you absolutely, if you were qualifying, should be taking advantage of QBI. And now, depreciation. So here's the thing. I know a lot of real estate or realtors, right? Real estate agents who are also real estate investors, right? So if you've got business assets like a car, or you have a rental property, maybe you own an office, right? There's a lot of things that can qualify for depreciation. Make sure you're taking it. I can't tell you how many times I have seen tax returns missing depreciation when the clients were entitled to it. And that, to me, that just is so wrong. So make sure if you've got any assets that are depreciable, that you are getting the depreciation deductions that you deserve for that. bonus depreciation this year for 2024 is what's it at, 60%? Yeah, I think it's 60, no, 40. I don't remember whatever it is, but you should be getting those depreciation deductions if you're entitled to them. So just a quick recap, right? Claim all of your business expenses. Make sure if you're splitting your commissions that you're taking that into consideration and you're not paying taxes on other people's income. Make sure you're capturing your self-employed health insurance. Make sure you're getting your qualified business income deduction if you're entitled to it. And if you are also entitled to depreciation, make sure you are getting it. And if you are not getting all of these things from your current tax person, you need to schedule a consultation with my office, because we'll make sure that you're paying the least amount of tax that you should be paying. So I hope you learned something. Got any other advice? Got any questions? Drop a comment below. And of course, we will see you next time.